day of recovery. Not too many people would have anticipated this at the start of the trading day today, or at least at 7:30 a.m. today, but it's been a remarkable pullback by markets, and a couple of reasons could be attributed to this. The underwhelming response from the NDRC at China, and of course the state election verdict not being too adverse for the incumbent party. And I think those 2 points together, along with the fact that we were seriously overstretched on the downside, probably aiding this recovery. Banks are leading, and by the way, IT has had a very decent intraday recovery as well for an index which was in the red while the rest of the other indices were in the green. Even this one has bounced back, so which is an interesting piece. Market breadth is solid, mid caps, small caps active, so all of that is known, and no surprise there that the advanced decline ratio is looking fairly robust today. It's a bounce. Now, whether this carries on tomorrow, day after, remains to be seen, because remember, yields are still higher, crude is still higher, but be that as it may, it's a day of bounce for sure. So let's enjoy it while it lasts. So bring up the Nifty 50 and those stocks there, and just show you what's happening here. So save for a few, Tata Steel is still down, JSW Steel is still down, so the metal names which are correcting because China's response has been underwhelming are still lower in trade. Be that as it may, everything else has pulled back. I mean, look at Trent, 8% higher for this one. It's a stock of a day really today, and big moves there for this one. Adani Ports and Adani Enterprises 4% apiece. There is strength in Mahindra & Mahindra yet again. The CLSA brokerage note there with an upward target price, and then the heavyweights like HDFC Bank and Reliance Industries are also participating. So it's a party out there today, but for the metal names, Tamanna, and maybe Tata Motors left a bit to be desired, because while the commentary was strong, people are clearly focusing on the here and now, and that is not looking all that positive. But otherwise, things look very, very robust in the session thus far.
Oh, what a recovery, and how. I mean, I think one, global factors as far as China is concerned, and then you have domestic factors, and the kind of change in mood is also showing in stocks. Just want to pull up what Chinese markets ended at before we get to the specific stocks, because that's a big part of the story. We'll pull up what Europe is also doing, because we're seeing the impact of that. Hang Seng down 9.5% finally. So a painful day there. Imagine some statements from a planning commission chief ending up completely throwing the whole China story and the recovery story out of whack. Nikkei ended up 1% down. The Shanghai was okay, about 4.5% up on end. I want to pull up Europe as well, because remember, we've had a couple of rough days of overnight trade, and Europe also not looking too pretty right now. 1% down on the CAC. All the key indices, the FTSE also over 1% down in trade. But broader indices, let's switch back to India, and broader indices over here, following the rally really that we've had across the board, because the India picture is looking nice right now. 1.5% up on the Nifty mid-cap, small-cap indices also more than 1.5% up. I want to pull up the advanced decline ratios as well, because this is now a day which is probably looking decent on your portfolio if you manage to catch it at the right time. That gap widening now, almost opposite of what you saw yesterday at this time. 24 hours ago, the picture looking very, very poor. Improved dramatically now with 1784 advances to declines. I want to pull up sectoral indices before we get to the specific stocks this afternoon. And Nifty Next 50 doing well. Nifty Media, the mid-cap 100, small caps. So you're seeing the broader indices really leading the charge. Look at the kind of reversal in mood, and this is why we're linking it to the poll results you saw in Haryana, because public sector companies roaring back 1.5%. Energy stocks, everything that was down this morning is back in that sense. Nifty Realty also doing decently. IT stocks have recovered. It's only the metals that are languishing, as one would have expected. But what are the big, movers? Look at Paytm. Paytm, we should pull up the intraday chart as well if we can, because huge volumes coming in on Paytm. Is it the turnaround buzz? Possibly. Turnaround plan buzz could be part of it. Vijay Shekhar Sharma is trying something new. He's trying to revive his company. 13% up on that stock. Paytm is really, in some sense, the stock of the day. Bajaj Housing Finance lost over 8% yesterday. Complete turn. Buying returns, and how? 10%. I think it's on socket today. If you pull up the intraday, you will see that. Huge upside. So you have everything in recovery mode. Saregama is possibly pushing up the entire media pack. There's buzz that they're going to acquire Karan Johar's Dharma. 8.5%, 9% up on Saregama. BSE does not quit, buzzing in trade once again, nearly 10% up on the Bombay Stock Exchange. Is it the NSE IPO buzz? What is happening over here? BSE definitely seeing action continuing. Other stocks which are buzzing in trade, Keynes, Tech, Dixon. Now you could argue this is the semiconductor push, this is the Make in India push. Essentially, companies which are recipients of positive policy moves by the government at the center are in focus today. If I had to paint sort of a broad theme and a broad picture, because the Haryana verdict actually reinforces the command that the Modi government has at the center and on national politics. That domination continues. That's the clear outcome of the Haryana elections. That's why you're seeing those category of stocks doing fairly well today. Just the Paytm stock. Just want to pull up Paytm to see the kind of strength you are seeing on it intraday. Look at it, near its day's highs at 739. The stock at 733 right now. So this is the big one. The volume's also massive on Paytm. So quite a few stocks in focus today, Niraj, this afternoon. And it's a party out there, but not that you can get too careless, because remember, this mood is changing quickly.
Very, very quickly, and therefore need to be nimble. But, well, for people who are brave hearts, took some trades, have made money, what do people do now is the key question. Kush Bora, Johnson right now. Kush, about 0.75%, and in fact, just a little bit of a chipping off from the highs for the index right now. Good afternoon. How do you approach trades on the Nifty currently?
Hi, Niraj. A very good afternoon. I think you and Tamanna summed it up very well. There is definitely enthusiasm on the street and green in the watch lists and the portfolios as well. But as you rightly said, or Tamanna rightly said, that you can't be too careless about this. And I'll give you a reason why. While I was scouting for stocks today, a lot of them looked very pleasant. 3%, 5% higher, 2.5% higher. But this wasn't packed with such a strong volume as it was on the way down. So while there is definitely some green on the screen, I just want to be a little watchful as far as the entire reversal play, if you want to call it, that is concerned. Now, coming to Nifty and Bank Nifty very specifically, we are looking at the resistance of the 50-day moving average, which is 25,100. And if you see the high for the day also is close to about that mark. So I will be a little watchful till 25,200 is taken out on the Nifty. On the downside, you've got 24,700, which is on the, perhaps for the second day acting as a support zone, 24,700, 24,800, that zone. So yes, the rebound play was due. We were speaking about it. Of course, very difficult to time from where it will come, but we've seen that. Is this a reversal? A little too early to call. For me, the first sign of that will be when Nifty takes out 25,200.
Okay. What about the Bank Nifty? Were you positively, pleasantly surprised? Because the Bank Nifty started its up move fairly early. Of course, a little more constructive on that end. And what would be the strategy there?
So I am a little more constructive on the Bank Nifty. The fall on this one has been much sharper. And, as we were discussing yesterday in the studio as well, that a lot of the heavyweight names have actually come back to those levels from where, the rally started. So if you look at an HDFC Bank and ICICI, even an Axis, SBI didn't really crack as much, but, didn't really move up as well. So a lot of these names have actually sort of come back to the levels from where the move started. So that consolidation move perhaps is going to continue, or rather, they are going to consolidate going forward, which also suggests that the downside from here could be limited. So on the Bank Nifty, the day low that we've seen yesterday, about 50,200, should act as a support zone. Here too, I will put in a caveat, which is 51,500, which is the 50-day moving average, should be the first level to watch for confirming any kind of reversal. So both the indices, while there have been good moves today, for any kind of a reversal, you want to play in a positional manner. You have to wait for 25,200 on the Nifty and 51,500 on the Bank Nifty, but a little more constructive on the Bank Nifty.
Okay. What about stock ideas, Kush? What is it that you are recommending? What can investors buy or maybe sell?
Well, I think, a lot of stocks hadn't really gone out of flavor. You had seen a few days of profit booking in the broader markets, but I remain very constructive on stock names. Dr. Lal Path Labs, this one has been on our radar for some time. Yesterday, it saw a round of profit booking, but has continued its move up. So I think this is one stock that can continue to surprise on the positive side. The entire pack, in fact, has been doing well, but this one leads the way. So 3,600, 3,770 are the two targets to look at. 3,450 is where you place your stop loss. From the cash segment, yet another garment stock, clothing stock comes on our radar, which is CRM Silk. Now, this is one stock that has had a not so great run over the last 3 to 6 months. But if you see for the last about 2 weeks or so, there has been a fairly decent consolidation going on. And yesterday and today, there has been a breakout on the back of very good volumes. So we believe that this momentum could continue in the near term. 525, 555 are the targets to look at. 480 is where you place that stop loss.
Kush, just before we dwell into the fundamentals of Trent, can't not talk about the big move that we've seen on that stock. So tell us now, from a trader's perspective, what should a person who's long on Trent do? Should the money be taken off the table, or should she continue?
If there's a third option, which is rejoice, celebrate your Diwali a little early, I'd like to put that also on the table.
By booking profits?
Partly, but only to regret, I suppose. And the reason for that is that the stock has always been in those overheated territories. But what we saw in the last 5 days has actually cooled this stock off quite a bit. Now, the psychological mark of 8,000 might act as a near-term resistance for a brief bit. But the up move that you're seeing today is on the back of very good volumes. I think you should continue to hold on. What I mentioned earlier on is, of course, in Zest. But if you have an existing position, you should most definitely continue to hold on. Now, the positional stop for you comes in at 75.50, around which the stock has made today's low and also the 20-day moving average. It's far from those overheated territories. So while fundamentally it might look stretched, from a technical standpoint, it's in a very comfortable zone. You could see a move towards 8,300, perhaps an 85.50 also in the coming month or two's time.
Okay, and let's put the spotlight on Trent firmly, because it's clearly the stock of the day, with a nifty 50 stock behaving like a mid-cap name, trading at all-time highs. Mahima joins in to tell us what could be amongst the many reasons that could be pushing the stock higher. And Mahima, the obvious one is, of course, more buyers than sellers. But why is it that the number of buyers are so high? What is pushing the stock higher?
Right. So today's reason, of course, for pushing the Trent stock higher is that they are foraying into the lab-grown space now. Westside will now be selling lab-grown diamonds under the brand name of POM. Now, that's not just the only reason why the stock has seen significant up moves in the past 1 year. Of course, a couple of things happening in Trent. For example, they're focusing on premium side of clothing things, which will improve their margins in going quarters. They're also expanding their makeup business, which is Studio West, which is also margin accretive, and it will add to growth of Trent. And plus, we can never forget the fact that recently it was, of course, added to the Nifty 50, and which is also one of the reasons why the stock has also seen a significant up move. Now, just to talk us through about what is happening in the lab-grown diamond space, where they're expecting to roll out POM exclusive brand outlets in the next 1 to 2 years. And lab-grown diamonds are generally at a discount of 30 to 80% versus that of natural diamonds. And they're expecting this to roll out via the Westside stores. And in terms of the fashion business, if we see what's happening in Trent, well, the fashion concepts are registering a double-digit like-for-like growth in the past few quarters. The revenue CAGR since Q1 FY20 has been around 39%. In terms of profit before tax, also the CAGR growth since Q1 FY20 has been around 39%. And the emerging categories now contribute to almost 20% of their standalone revenues. This means that the emerging categories, which is the premium side of things, are picking up, and which is also aiding their margins. And the online reach has now grown by over 30%, which is also adding growth to the revenue. In terms of the Star business, where Star business has also picked up in the last quarter. The like-for-like growth was over 20%, first time in double digits. And in terms of now, just to give you a brief about what brokerages are saying about Trent. Well, Kotak expects the rollout in the next 1 to 2 years, and what they're saying is that this reinforces cautious stance on Titan. So while Tata is not going into lab-grown diamonds directly, it is definitely going indirectly via Trent, but this will, add a dent overall to Titan. And they're expecting an impact to weigh on Tanishq studded segment, which will overall impact Titan's margins. In terms of what pricing it will be launched at, well, 1 carat solitaire ring will be priced at around 24,000 to 29,000, which will be much lower as compared to the natural diamonds, and this is implying an underlying retail price of roughly 15,000. Now, in terms of POM, it has a potential. This was, in fact, the highlight of the note. What Kotak believes is that POM has the potential to be the Zudio of lab-grown diamonds jewelry market. Now, in terms of the valuation bit, of course, Trent is not a cheap stock. It's a very expensive stock. Even if we see the Bloomberg estimates for FY 25 estimates and 26 estimates also, it is expected to be trading at 102 times. And in fact, if we take the retail stocks which have had a market cap of over 2 lakh rupees, Trent is the most expensive one, trading at a P of 151 times, followed by Avenue Supermarts at 90 times. So all in all, of course, the stock has seen an extremely good momentum, but of course it remains a much expensive stock.
Well, expensive is relative. Lab-grown diamonds is a very, very interesting play, and especially an interesting play, I think, because a lot of, I would say, the jewelry companies that we speak to, gold jewelry companies we speak to, keep telling us that there's no demand for lab-grown diamonds, and here comes Trent and plunges head first into this space. Aditya Shah joining us this afternoon. He's founder at Hercules Advisors. Aditya, great to have you on. Now, just before I come to you on your take on Trent, just quickly to highlight the Tata Motor numbers which are out. Their passenger vehicle global wholesale numbers are down 6% year on year. The numbers are not looking great, let's be honest, and you're seeing a bit of a slide there. The global wholesales overall is 11% down year on year at 3.04 lakh units. And of course, the passenger vehicle ones are down 6%. Let's start with your take, though, on Trent, and then we'll move to Tata Motors. Let's talk a bit about Tata Group stocks this afternoon. Aditya, hi.
Hi, good evening. So I found the Kotak report very amusing because they have a sell on Titan, which is trading at about 100 times multiple, and they are bullish on a stock which is trading at about 150 200 times multiple, saying that the growth could be faster. Investors should be careful, really very, very careful on both of these stocks. Both of these stocks are extremely expensive, as is with all Tata companies, especially with Trent. Trent, of course, they've done really well with the Zudio ramp-up that is happening. Zudio is now even bigger than what Westside really is. And now with this lab-grown diamond news really coming about, it is good for Trent per se. However, if you look at the valuations per se, I don't see any margin of safety there on the valuation. Even if Trent was to undergo time correction over the next 1 or 2 years, still the stock is extremely cheap. Growth is there. However, the valuation is extremely crazy on this stock. I would advise retail investors to stay out of this euphoria and try to go and invest in other stocks, other Tata Group stocks as well, where the valuation is at least saner and not insane as the valuation on Trent really is.
Okay, 8026. Aditya, every time somebody's written an obituary for Trent, and every single point of time the valuations were expensive. You pretty certain you want to book profits here?
No, I do not want to book profits here. I want to hold on to whatever I'm holding. Class companies will continue to compound even if they are expensive, but you will not like to initiate new positions on the stock at this stage. If there is any correction or if there is any blip in growth for 1 or 2 quarters, that could be an excellent opportunity to add. But right now, this is wait and watch stock buzz.
Okay. Trent is wait and watch. Kush, your take on Trent?
Yep. So as I just mentioned that, just the week's, profit booking that's happened, it's put Trent from a technical standpoint, at least in a very comfortable zone. The recovery is on the back of good volume. So I think it would continue to hold on. The 20-day, moving average will around 7,500 will sort of act as a strong support zone. On the way up, 8,550 also in a couple of months' time, is very likely to continue holding on to Trent. Doesn't seem as, there's too much trouble here, especially from a technical standpoint now.
Okay. We also talked about Tata Motors briefly. Aditya, what is your take on Tata Motors? And, how are you looking at it? Passenger vehicle numbers have not been good. The JLR numbers and updates we got were also not too positive for Tamo. In the auto pack, how would you look at a Tamo versus a Mahindra and Mahindra, for example, which is in focus today thanks to CLSA?
In my opinion, the automotive sector, not only in India, but even in Europe and US, is undergoing a massive slowdown. And we've already seen within the Tata Motors numbers, the European numbers are not too great also. In my opinion, you need to be very careful on the automotive stocks per se. Here, my top pick would be Mahindra and Mahindra because they are doing excellent work on their PV business, as well as their agri business is also doing extremely well. That will be my top pick, followed by Tata Motors, and then there will be Maruti. We will need to see how Hyundai lists over a period of by the end of this month, and then take a call on where to invest. However, auto ancillaries look very interesting to me, where a lot of correction has played out. Somebody like Motherson looks really very interesting to me at this stage.
Motherson looks very interesting to you. Kush, how are you feeling about Tata Motors?
Well, the move hasn't really been encouraging to say the least. Now the long term support for this one actually comes in at 880. Now the low that we've seen today is also around 890, 895 odd levels. So I think there's some more room on the way down. And even then, I wouldn't really go out and venture a trade just yet. I just want to see if it does hold that 880 level. Very comfortably trading below the 200-day moving average. So not a very comfortable sign for a trader or an investor. So watch for the key level of 880. If that is held, then perhaps you could see some sort of sideways consolidation come in. But if that is broken, then further levels on the downside very very much likely. So no revival just yet on the cards. Key level to watch is 880.
Okay. We'll talk about the other big mover, which is Paytm too, but I think it's time to move on to the key brokerage note of the day, because that too has gotten the underlying stock moving, and that stock is Skipper India. My colleague Anushi joins in to talk about what Nuvama has to say about Skipper in a note in which they have initiated coverage on the stock. Anushi.
Hey Niraj, we are seeing a strong up move in Skipper Limited and almost about 11% of gains that we are looking at. And as you mentioned, this is on the back of the Nuvama note which has come out, in which they've initiated a buy call, and this is with a target price of about 650, implying about a 44% of an upside if you take the yesterday's close in account. Now, before I go into key details as to why they're bullish on the stock, just a little bit about the company. Skipper Limited is the leading manufacturer for the transmission and distribution structures, and also undertakes EPC projects in the infrastructure segment. So the current market cap stands at about 5,400 crore. Coming to the key highlights of the note now, strong presence across the T&D system and a poised for a strong growth trajectory going forward as well. High voltage macro tailwinds that they are looking at for both the domestic and the international side, which will continue to drive the performance for the business. Also now they're doubling on their tower capacity and is the only backward integrated player in India in this space. Also, it holds a niche position in the pole segment that we are looking at. Coming to the key risk, though, what remains on a watch out is the execution delays in any kind of orders that they've poised for, or any kind of a sharp price movement in the raw materials that they are using. So that remains on a watch out for. They valued Skipper at a 25x of based on its FY27 EPS, which gives the 650 of a target price that we are looking at, and a 44% upside. So strong note coming from Nuvama on this one.
Okay, Skipper doing well on the back of that note, 11% up. Let's pull up Electra as well. Electra also some news coming in. That stock zooming this afternoon. Electra Green seeing a spike. They have actually been declared least quoted bidder. So new deal over there, which is working well for Electra Green Tech by Himachal Pradesh Road Transport Corporation. All right. So that's one of the stocks that we're tracking this afternoon. But, Kush, I wanted to ask you about BSE. BSE has just been, on a different level. I'm wondering if this rally is done yet.
Well, the charts certainly don't say that. There is very clearly, a resistance near this, or rather, I would say in the zone of 4,200 to about 4,250. But other than that, if you see, given the kind of performance that the markets have had in this week, and then, how the stock has performed, very evidently, there is this relative strength. So I think you should continue to hold on if you have an existing position with a positional stop loss just under, 4,000. I think 4,400 to 4,550 are the levels to look at on the upside. If you don't have, you could still consider, because the kind of dip that the stock saw about a week or so ago has put it very comfortable in the in the momentum indicator space as well, so quite far away from the overheated territories. Volumes are picking up quite a bit, especially on the days when the stock is higher. So clearly a lot of delivery marking. So all in all, from a technical standpoint, the stock is well placed. The resistance zone of 42 to 50, once that is taken out, you'll see momentum catch up as well. But on the whole, as I said, the stock on a firm footing.
Okay. All right, we'll take a very short break. When we come back, we also shift our focus to the big event for tomorrow, which is monetary policy. No rate change, no rate cut expected. But what will we be looking out for from the MPC? We get you that after the break. We also get you the top BTST ideas. Stay tuned for that and more.
Back with India market close, big day of news flow, state election verdict out. It's not that the China stimulus was any higher and the equity markets have reacted duly. Now, if today was a big day, tomorrow is a very important day as well, because the 6-member Monetary Policy Committee has already begun deliberations on interest rates and will announce the decision tomorrow. Pallavi Johnson with what the street is penciling in. Pallavi, anything at all?
Right. So the Monetary Policy Committee meeting, the Monetary Policy Committee is set to announce its decision. Now, of the 43 economists polled by Bloomberg, actually only 3 expect a change in the benchmark lending rate. That's the repo rate, which is currently at 6.5%. All of the others expect the central bank to continue to maintain a status quo. Still, it's going to be an event worth watching out for, and I'll tell you why. It's the first MPC meet after the appointment of the new external members. That's Shogata Bhattacharya, Nagesh Kumar, and Ram Singh. What we're also going to be watching watching out for is any possible rewording in communication from the central bank. That's because we have seen some easing in several high-frequency indicators, be it PMI, be it India's merchandise trade, or be it the index of core industries, among others. Now, what else has changed since the last policy? Let's take a quick look at where we are at on the inflation front. Now, retail inflation came in at 3.65%. That's for the month of August, and that's compared to a print of 3.54% that we had seen in July. So, in July, in fact, inflation was almost at the lowest in almost 5 years, and despite a very small uptick in August, it remains under the central bank's 4% target. So we are looking at a print that's actually higher this time around in September, given some normalization in that month, and also the fact that the previous two prints were largely base effect led. What's also changed, of course, is several global factors. We have seen the US Fed begin cutting rates. It's cut rates by 50 basis points. We've also seen further deterioration in geopolitical factors. We're going to be watching out for how the US elections play out, what the impact on China is and its currency, and the repercussions on India. Still, for now, the MPC is expected to continue to focus on domestic factors, though some economists have not ruled out a change in stance.
Okay, thank you so much for that, Pallavi. So that's likely that we will have no big moves from the RBI come tomorrow. Madan Sabnavis joins us, Chief Economist at Bank of Baroda. Madan, hi, great to speak with you as always. Now, do you think that the debate shifts to whether the RBI is holding off for too long, or are you also penciling in a rate cut only by December, if at all?
No, in fact, I think that a rate cut is possible earliest in December. So I would say earliest in December because it would all be driven by data. We know very well that the low inflation numbers we had for July and August was primarily on account of the base effect. We also know that the inflation number for the month of September is going to come closer to 5%. 5.1% is what we are looking at. And this will probably stay also in the month of October. We also know that we've had certain late monsoons, heavy showers in the month of September in certain regions, and that has had an impact on the horticulture produce, especially vegetables. So I think there is an upward tendency in prices also, and that's something which the RBI will be keeping a close eye on. So therefore, I think that in this particular policy, it would be very prudent to maintain a status quo. And as was mentioned earlier, I think the geopolitical conditions have changed suddenly ever since this Iran-Israel issue came up, which also means that the entire world will be on guard right now. And I'm quite sure that if this happened before the Fed rate cut really took place, there might have been some tempering even on that side. So I think there has been a major change in the last 1 week or so, which will make all central bankers across the world to look very seriously at their actions and not just go by the immediate inflation number, which will also hold for India.
Mm-hmm. Madan, so what's that one standout thing that you would watch out for, Madan? I mean, guessing it won't be a rate decision. So what else? Would it be the RBI's view on what's happening around the world? Could it be some statistic that should come about tomorrow? What is it that you would watch out for?
So actually, if we look at the RBI statement, the governor's statement is more or less standardized. So we know what comes in the first paragraph, second paragraph, and so on and so forth. So what could we be looking out for? One is, of course, the inflation forecast, because we know that in Q2, the RBI had earlier forecast a number of 4.4%. We have low numbers of 3.5, 3.7 for the first 2 months, maybe 5% for the third month. So there will be a change in the Q2 forecast for sure. But on the whole, we need to see whether the 4.5% number remains in that particular range or does it change significantly. The second will be in terms of the GDP forecast. I don't think there will be any change. And even though the last month has not really given positive numbers for the PMIs or even for that matter, even the core sector data, we all know that's been influenced by factors like base effects for the core sector. PMI cannot be read just in isolation. It's still well above 50. So I don't think there will be a change in the GDP growth forecast, but it will be interesting to hear what the RBI says. Because if I just talk to my own clan of economists, I think almost everybody has brought the forecast for GDP for this year closer towards the 7% mark. We had Bank of Baroda looking at 7.3%. So I don't think there will be any change right now. I think the overall conditions in the real economy appear to be very stable right now in that 7% region for sure. But I think what will be of interest, which we won't get to know tomorrow, I mean, tomorrow we'll get to know as to how the members voted. But in terms of the minutes which are released later on, as to how exactly have the three new members looked at this entire policy. Because I think that's very important, because that will give you a signal about how they would be looking at the growth inflation matrix going ahead.
Okay, just one point, Madan, on, your assessment on the economy right now. Of course, we'll hear from the Reserve Bank tomorrow. But the kind of consumption patterns that we're seeing, and we, of course, speak to the corporate side on a regular basis. Rural recovery, is it turning out into it to be an issue? Are you waiting to see what festive season is looking like?
Yeah, I think that will always be the issue for us, because rural demand typically picks up from the end of September into October, November, and December. That's when the Kharif harvest comes in. And going just by the IMD data, we know that the monsoon has been very good. It might have been too good in certain areas, which have already affected, as I mentioned, the onion crop. But on the whole, I think we would be expecting the rural economy, especially the agricultural sector, to do better than what it did last year, which means that any kind of pent-up demand which is there in the rural sector is something which should manifest in the months of October and November. So I think what we're going to see, the Dasara sales, the Diwali sales which are going on, which will start very soon, I think that will be the very critical point from the point of view of corporate India to see how really demand pans out, because I think it's been fairly subdued in the last couple of months. Last couple of years. But this year we should also acknowledge the fact that inflation is still a major issue, because I think this has been one factor which has militated against consumption in the past, because with high inflation, high cumulative inflation, the real purchasing power of consumers has definitely been affected. We have seen some kind of a revival in Q1 going by the GDP numbers which have come out. So we do hope that this will be something which will be sustained, but that will be seen more in Q3 rather than in the Q2 corporate numbers.
Okay, thank you so much, Madan. Great to speak with you as always. And of course, we'll wait and watch what Governor Das says tomorrow. Remember, updated live and minute-by-minute coverage right here on NDTV Profit. Meanwhile, let's turn our attention back to the markets, and it's been a good day. It's definitely been a good day for the markets, in part because of election results that we saw. Quite a turnaround coming in there, but the big surprise really on the Bank Nifty and the kind of strength we've seen in the Bank Nifty. I want to pull up HDFC Bank just for a bit and see the kind of rebound that we have tracked there through HDFC Bank, nearly 2% up. Aditya, is the mood turning on two heavyweights? Let me pick up HDFC Bank and Reliance.
So let's first come on HDFC Bank. The quarterly numbers were not great, but it is a blessing in disguise for HDFC Bank, because they really need to slow down the loan growth. Once the loan growth is slowed down, the loan to deposit ratio will start to come under control for HDFC Bank. What the market really wants to see for them is that the margin starts to recover, and once the margin starts to recover, the stock will not stop. So I think there's some bit of time this quarter. There will be a marginal improvement, but the real improvement from HDFC Bank will come from the next 2 quarters first. So that's on HDFC Bank. Now on Reliance, I don't think that the results are going to be a big surprise for Reliance. The retail business is seeing some bit of turbulence. We see companies like DMart report not so great numbers per se on their retail business side. Jio is doing extremely well, and their oil refining business is also doing extremely well. So the stock has corrected about 5 to 7% from the top of about 3,000 rupees. And I am very positive on the stock per se over a longer period.
Okay. Some stocks moving higher, by the way, under the mid-cap end of the market. Just wanted to mark 2 or 3. The Endurance Technologies is certainly one. There is Balaji Amines. There is Divgi Torque. And just look at the intradays of Divgi or Balaji, and you will see some sharp spikes in the last 10 or 15 minutes of trade. So some stocks are certainly inching up in trade. So do watch out for these. But what's under pressure is Tata Motors. After JLR production slumped 7% and retail sales were down 3%. My colleague Puneet is now joining us to tell us some details of Tata Motors or JLR. versus the other luxury car makers? And Puneet, I believe that's a comparison that we are making.
Yes, definitely, because the mood of the market is not very good for Tata Motors, and that's rightly so because of the Q2 volume, but it makes sense to look forward, and that's where the divergence comes in. So specifically for Tata Motors, Q2 volumes, retail sales down 3%, wholesale sales down 10% in this particular quarter, while, production was affected due to supply chain issues as we've highlighted during the day. This was due to aluminium supply shortages and disruptions that the company had mentioned in Q1 that Q2 and Q3 somewhat might be affected. What's important is that the company has highlighted that H2, basically from October to March of in the next 6 months specifically, the wholesale volumes are expected to be recover strongly in this particular time frame, and that's very positive for JLR specifically, because when you compare it to someone like a BMW and Mercedes, both these companies have actually cut their volume guidance for this year as well as their financials on EBIT margins as well. So BMW first, they recently downgraded their outlook for this year. They've said that volumes in this year will be lower than last year, and that's the stock price in the listed market of Europe has been affected by that. They are expecting EBIT margin also to be around the 6 to 7% range versus 8 to 10% that they guided earlier on. While Mercedes has cited weakness in China as one of the key things, and their CEO had recently quoted as well that there is a tremendous amount of cautiousness because of China. Now we looked at this China factor specifically and what was the key difference, because when you look at BMW, the deliveries in China is roughly about 30% of their total sales in Q1 of FY25. The same number for someone like a Mercedes was actually higher at 35%. And when you look at the same of JLR, that's around, about 22 to 23% in Q1. And if you also look at, because we have the historical data as well, FY19, the level was around 17% for JLR specifically. So not in much difference, but for like a Mercedes and BMW, it's gone up tremendously higher. I finally also just last piece on the financials as well, because the last 5 years sales growth has been somewhat in the mid single digits for someone like a JLR, but look at the turnaround in the financials for the company. The EBITDA margin has gone up from 8% to 15.9% now in FY24 specifically. When you look at the EBITDA per unit also, in pounds, this has gone up from 3,900 pounds to almost 11,500 pounds, and that's reflected in the strong free cash flow generation as well. It was a negative free cash flow company for almost a decade. That's finally changed now as well. Net debt, it's already net debt free almost is going to be this year for JLR, and their return on capital employed has also gone from negative 1% to almost 24%. So that's one of the key things that we wanted to just point out, that compared to global players, it's a much positive outlook that it's giving for H2. But let's see how the company's Q2 results are and commentary for the year forward. Back to you.
Puneet, stay on with us, because another story that you've been tracking is Ola Electric, and another rough day. The company has now got a notice from the consumer body on their service issues, but they came out and they said that they are absolutely going to be responding with data, etc. You've seen the stock recover as well. What are the kind of volumes we're seeing on Ola, and why have these concerns been piling up?
Well, definitely, the service center issue is the center of all of these things, because, currently they have about 500 service centers, and in the last 3 to 4 years, they've sold roughly about 7 to 7.5 lakh units. And that's one of the key concerns, that, the customer or the, person who's purchasing this electric scooter, once these scooters go into the service centers, they have to wait around 20 to 25 days for them to come back after repair, and post that also certain customers have been facing a lot of issues. And that's one of the key things. So they've got this notice from your consumer rights. They were violated consumer rights, misled advertisements, and unfair trade practices. That's what they've said. Now the company has said they will respond to this in the next 15 days. That's the time frame on this. But particularly, they are seeing no financial impact as of now. The one thing I want to highlight is they are looking to increase the service center from 500 to 1,000 in just the next 2 months, which is another very big target that they are putting out. Apart from that, one other thing that we should look at is also the EV bike segment that they're getting into. Bookings start from Dussehra this month specifically. Deliveries start from January. So while they are still trying to recover and service the EV scooter market, they are already launching the EV bike market as well. So while market has reacted positively after today or after the 8-9% fall yesterday, I think this service center issue needs to be sorted out before, and I think we'll await more commentary from the management after the Q2 results and the Q2 conference call as well. Back to you.
All right, thank you for that, Puneet. Aditya, your take on Ola and the kind of recovery we are seeing. Do you see this as, fundamentally temporary blips? The service issues that they're also trying to push out. I know there was a lot of Twitter furore. So your tweets as well on it. But, what is the long-term view on an Ola?
So the bigger concern for Ola should have been that the market share loss that they have seen in the scooter space. In the EV scooter space specifically, their market share has gone down. Incremental market share has gone down from 47% to about 29%. What is really happening is that the company has expanded too fast and the service network is not kept up with it. And incrementally, customers are really very unhappy. So rather than concentrating on the Twitter antics that we've seen, the company must focus on solving all of these issues. Otherwise, eventually, there is a problem that is going to come about. Expanding into the bike space and all this really should have been a step taken after the company should have solved the shorter service center issue. So in my opinion, the stock is a clear avoid right now at this stage. The company needs to address all of these issues and not wait for the government to give them a notice and solve all of these issues. So it's a clear avoid, it's a clear stay away from the stock and watch how the company solves all of these problems over the period of next 6, 10, 12 months before taking a call on the stock.
All right. So that's the view coming in on Ola Electric. Meanwhile, look at Vodafone, Paytm, all of the stocks that are always buzzing in large volumes are in action today. Suzlon, look at Suzlon's recovery from the day. Let's pull up Suzlon's intraday chart because it started with a bit of pain, right at rock bottom in the beginning of the day and then has recovered very smartly. Paytm is on another roll. Kush, both of these stocks on the charts, let's talk about, you spoke about BSE, which you like, but Paytm, Suzlon and Vodafone.
So, Tamanna, in fact, if you remember, Paytm was a stock we discussed around 550 levels and, we discussed that the risk-reward ratio seems very favorable. From there on, the stocks just practically headed one way up, 2 days of correction and then, back on the winning ways on the back of good volume. So I think you should continue holding on if you have. If you don't, you could add, you could still go out and add. I think from a near term, you're looking at a 790 and then an 840 as the target. Now, on the downside, the support zone for this one comes in at about 700 or a little over than that, 710 kind of zones. So Paytm, continue to remain bullish, very good delivery, marking volumes on this one. Now, as far as Vodafone Idea is concerned, my view is the same as it has been over the last, year or two, maybe a little more. It's a very clear, avoid for me. Which was the third stock, Tamanna, that you mentioned? Suzlon, was it?
Yes, Suzlon was the one.
So Suzlon, on the whole constructive, just that in the near term, it's gone into a bit of a consolidation with a negative bias. So this, 75 band will act as a resistance. Just wait for that level to be taken out. I know today the stock is back on, on the back of good volumes. It's up, but the 75 mark, 75, 76 this zone will act as a resistance. Once that is taken out, you could see a positive momentum building in, and that's when you should consider a trade. So, a conditional trade on this one, once the 76 level is taken out, should you consider. If you have an existing position, still not an issue. Continue holding with a positional stop loss at 68.
Today, Force Motors, HAL, Just Dial has inched up. Voltas has some gains. Dr. Lal, Path Labs. Some of the stocks have some sharp spikes and really trending higher towards the close of trade. So watch out for all of these. Maybe Kush's closing strategy could be one of those. Who knows? But before we get into Kush Bora's closing strategy, get a set of stocks which are active today because of a Nomura note, I believe. Harsh Johnson to talk about that because the stocks are really buzzing in trade. Both Tata Power, for sure, but I think even JSW Energy. Harsh, tell us about why is it that Nomura likes them?
Well, yes. So first off, just with regard to the tailwind on the sector as a whole, Nomura believes that plenty of legs for the power sector, right? They're clocking in a 7% growth for the next 5 years up to FY30 in the power sector itself. Strong demand both in commercial, industrial, as well as residential, and therefore likely enough levers for that growth to even sustain at the kind of level as it is. In terms of renewable energy as well, that's a new vertical, a new segment, 500 gigawatts being built in terms of renewable energy capacity in the country all the way up to FY30. That too will likely be a very strong lever for both Tata Power as well as JSW Energy. Now, specifically, Tata Power expected to have an EBITDA CAGR of around 16% through to FY27, double the renewable energy capacity from the current to 10 gigawatts. They're going to deliver on plenty of EPC projects. That's the one piece that you'll have to look out for on delivery of their EPC projects. And they're expecting a sharp jump, especially from the Odisha Discom. That will aid profitability, in fact, and that's the other lever that Tata Power likely has going all the way up to FY27. JSW Energy, 38% EBITDA CAGR through to FY27. Again, renewable energy capacity is set to double, but there's significant earning visibility. 92% of their revenue share is tied to long-term power purchase agreements and large wins with regard to renewable energy as well. So all of those should help give a stable set of numbers to JSW Energy. Upsides from higher utilizations and tariffs could obviously further aid the numbers. So constructive, 27% upside on Tata Power, 31% upside on JSW Energy. Of course, a lot of that already getting captured in the stock price today.
Okay, so power is up, power is rocking. I think everything apart from metals, even IT has recovered really well, but sectorally, you are seeing banks move up. The mid-cap and small-cap indices are the ones that have roared ahead as well. Kush, let's quickly get your BTST strategies.
Sure. I think I already gave one, rather unknowingly. The reason I say that is because Dr. Lal PathLabs was, the stock that we discussed. And at the opening of the show, 3,500, 3,520 was trading at 3,600 was the first target, 3,582. So if you wanted an intraday or a BTSC trade, you might as well take some profit home, on this one, or you can continue holding on for targets of 3,770, which is the second target. Now, the BTSC call for the day is Ipca Labs. This stock also has had a splendid run, and technically very beautifully placed for the most part. In the last 4 months, the stock has respected the 20-day moving average. Off late, it just dipped a little to the 50-day moving average, but again, very beautifully respected those levels as well. And on the back of good volumes, close to the high of the day, going home close to the high of the day. This is a very encouraging sign. So I think Ipca Labs is something that you should consider as a BTSC trade. The targets for this one are 1555 and 1575. Stop loss on this one, 1515.
Aditya, are you buying into fresh ideas currently, or are you biding your time? And if you're buying into, what is it that you would add and why so, more importantly? Give us the investment rationale for any one of the things that you might be buying into, mid-sized maybe.
So definitely we are buying. As I've been very vocal, that we are buying the chemical sector as well as the pharma sector. One of our top picks within the pharma sector continues to be Krishna Diagnostics. It's a B2C business where they bid for government tenders and service the government centers per se on the diagnostic side of it. And they're one of the cheapest diagnostic companies available in the market, as well as the prices at which the company does the test is also cheap. The company's promised 30% growth this year, 30% growth next year, and over the next couple of years, we expect the stock to do really well from here. So Krishna Diagnostics continues to be our top pick. We are adding on any falls. Yesterday there was an 8-9% fall, and the stock has bounced back to it. That is one of the stocks that looks really very interesting to me. And within the chemical space, as I've been pointing out, Deepak Nitrite looks really very interesting. The company is poised to have a multi-year growth over the next 3 to 4 years from the capacity expansion that they are really doing, and we are very bullish on the stock over the period of next 2 to 3 years.
Mm-hmm. Okay. And is this earnings growth led? What are the targets that you have here, Aditya? I mean, I'm not asking for a technical target, but do you believe there is a 25% upside over the next 2 years, or a 30% or a 50%?
So on Krishna Diagnostics, we feel that the company, if the company is able to deliver 30% this year and 30% next year, the stock could easily reach 1,000 to 1,200. in no time. The stock is really very cheap, trades at about 30 times multiple, whereas all other diagnostic companies trade at about 60 times multiple due to various reasons. On Deepak Nitrite, we feel that the stock should already reach 3,000 and above. The growth in profitability should be about 20% this year, 20% next year, led by the MIBK expansion that is going to come about. So I'm positive per se that the growth is going to be earnings-led, and a lot of valuation compression, especially on Deepak Nitrite, has already happened.
Okay. Well, speaking of chemicals, speaking of, they get impacted by China. Metals get impacted by China. And in fact, insightful comment from Axis Bank's chief economist and global market research head, Nilkan Mishra, who spoke about the Indian market sell-off triggered by, not necessarily being triggered by investors wanting to create space to buy into Chinese equities. Listen in to this argument.
I don't think the India sell-off by foreigners was directly linked to creating space for buying into Chinese equities. And frankly, even the correction we are seeing today is, if something moves up 25%, a lot of the people who were kind of anticipating this or had been stuck in it would try to exit. So a sharp move up and a sharp move down, frankly, it's not a sign of anything for me. The problems in India, I think, are also, I think in the near term, we are seeing the economy slow down quite meaningfully. Many high frequency indicators have worsened meaningfully in the last 4-5 months. And our expectation is that this is temporary. And as the government fiscal spending picks up, as the RBI is signaling that on the quantitative side of money, they are easing a bit. All of those start to flow through. The economy should revive starting Jan-Feb. But I think the result season is, I think, going to drive cuts in earnings. So some of what we are seeing in India is a reflection of our own weak economy and not so much about people just dumping India to buy China. Now, given that the Chinese government has shown, so far they were least interested in these things, given that they have shown that they want to bring inflation back and then stabilize the economy, and Chinese equities were very cheap, and therefore some reallocation may be permanent. I don't think we will go back to those kind of P multiples again.
Okay, so important points coming there from Nilkant as well. But Aditya, I just want a quick call from you on what the strategy will be like for tomorrow's trade. How big an event is monetary policy in your view, or is it going to be one of those things which is sort of an FYI, since no big change in stance is expected?
Tamanna, I don't think that there's anything that is going to happen. The biggest concern I think that the RBI would have is the vegetable price increase that it has seen. That would inherently mean that RBI will be forced to not do anything per se. So I think it is really a non-event. What the RBI would try to do is it will try to give some hints about future rate cuts, and that's what the market would be really looking forward to. If the RBI gives a strong guidance that it is most likely that within the December monetary policy committee they are going to cut rates, the market will cheer it. However, there's little action that I'm going to expect more.
Okay, last call, Kush. Just before we close, what would be the Nifty trade for tomorrow morning?
Given the momentum, it should be on the long side. But if you can try and avoid, plenty of action in stocks. Ipca Labs and Dr. Lal Path Labs, remain our picks for tomorrow as well. Okay,
well, thanks a lot for that. Kush as well as Aditya, really good of you to join us today on a good day of trade, I must say. And look at that. 1 minute 30 seconds or 1 minute 40 seconds left. Let's just quickly mark what's happened, because the Nifty is ending at the high point of the day, which is actually a really good sign. Aided by banks, no doubt, but the others have participated too. The Nifty IT has done reasonably okay for itself, so that's one really good sign. Part one is that. 0.4% higher after being down nearly 1%. So that's 1.5% delta from the lows of the day for Nifty IT. That's really good. The market breadth has looked solid, which is the other big thing to watch out for in the session today. So quite a bit of a turnaround, and again ending at the high point of the day. And if let's just look at the Nifty 50, let's just focus. I'll start with the Nifty 50, focus on that. Look at the change, a complete turnaround from what was the case at the start of the trading day. Yes, metals are lower. A couple of stocks like SBI Life are lower. Titan is lower because of maybe Trent's entry into lab-grown diamonds, maybe. So all in the family, if you will.
I mean, Trent shining on lab-grown diamonds, 8%.
Yeah, but it's all about Trent and just what it does, really. All the moves. But it's not just that, right? Today, when you look at BEL, Adani Twins, M&M, and then HDFC and RIL, it's been a splendid day of trade.
Yeah, I mean, the reasons for all, Bharat Electronic had a whole update on their order wins. Maybe that's why, say, let's say, note on M&M. But yeah, you need that kind of a move actually to support it one way or the other. Metals on the lower side. But let's pull up what the mid-cap and small-cap index is doing and how we are closing off for the day. And here's the real story, I would reckon, Niraj, even more. I mean, the Nifty, of course, great to report, but 2% rise on the mid-cap 150, 2.5% on the small-cap. This is everyone's portfolios which were battered and bruised are seeing that kind of momentum today. Just pull up the sectoral indices as well for a second, because banks are the big winners as well. I think the Nifty CPSE going up is a big deal. Mid-cap, small-cap, all of them doing very well. So the broader markets coming into play, autos participating as well. I think focus now shifts to IT. Next couple of days, TCS results will come in on Thursday. That kicks off the entire season. You could see some rate sensitives in a bit of play tomorrow early morning, but nothing much expected on the interest rate front, so not too much action there. Metals could continue to languish depending on what are the statements coming out of China tomorrow morning. But otherwise, we're looking hale and hearty. I mean, this is like one of those dramas full of twists and turns. If you look at what happened this morning to this afternoon, Niraj, because that story keeps changing, and on the broader markets as well. Look at the top gainers and losers on the BSE 500, and I don't know what's explaining Paytm closing 16% up.
Or any of these for that matter. But I guess they were also beaten down badly in trade that they've done really well. Metals sulking though, as expected. But with that, it's a wrap on this leg of India Market Close from Tamanna and me and the team that put this show together. Thanks so much for watching.